No, I don't think there's any great surprise considering that, you've had falling stock prices, falling home prices more importantly, because that's where most people's wealth is really tied up. A weak employment data, rising food prices, high petrol prices. Unless you're among the super rich, what do you really have to feel good about in terms of the economy? Very little.
Okay. Why then do we see the stock market do what it did yesterday? We had 2 straight gains of days. Okay, there's a little bit of profit taking yesterday, when it's obvious that the economic fundamentals still aren't looking good.
Well, first of all, I think people were expecting this consumer confidence number to be low, but what really rattled some economists was the expectations component within that, which really was quite dire. Let me read you from Ian Shepardson, highly respected U.S. economist, quoted a lot, in the international papers, and I get, always his information every day. And this is what he had to say, this is very grim news indeed. If sustained at this level, consumer spending should be expected to drop to a year-on-year rate of minus 2% in the near future, a pace last seen in 1974. Remember, that was the second oil embargo, right? And then only very briefly. If spending does weaken to that degree, an outright recession will be unavoidable, and a severe recession will be very likely. These are his words, not mine. In short, this is one of the most alarming economic reports we have seen in this cycle so far. Now that is very, very dark reading.
What does he mean though when he says that an outright recession is unavoidable? Surely we're in a recession already.
We are in a recession, but technically they haven't belted it yet as 2 negative quarters. Okay. I mean, we are in a recession. The question is, how severe is the downturn going to be? And if the expectations components about what people expect, is correct, then he's saying basically a very severe recession could be in the cards.
Okay, I mean, can that be avoided though? Is there anything out there that could stop us from sliding into a severe recession?
Well, I think first of all, house prices continuing to slide is a real negative. So that was to stabilize, although I don't think that's going to stabilize anytime soon. That would be a plus. A reversal in the stock market, that would be a plus. Employment starting to rise again, that would be a plus. No further worries about the financial sector having further problems, that would be a plus. And lenders loosening up on their lending criteria, that would be a plus. I don't see anything along those lines happening anytime soon.
I tell you, luckiest man in the world in that I get to talk to you on air every day, but I've really been enjoying what you've had to say in your blogs, and a lot of our viewers as well enjoying reading.
I get a lot of comments.
Reading your thoughts. Yeah, you want to tell us?
Sure. Yes. This one. This is from Ananda, who wrote. Quote, she said here, I wholeheartedly agree with Todd's blog. This turmoil is because of what I call, quote, fairy tale finance and economics. This is what they call it. They go, hence a massive amount of money is tied up in stocks, which should be better spent on either new businesses or expansion of existing ones. Well, first of all, there is a lot of money tied up in stocks, but actually, if you look at stocks over the long run, even though I'm very bearish, people have profited well by stocks if you look over, historical standards. So being invested in stocks is not necessarily a bad thing. The real problems now, of course, are in the, basically the credit markets are still blogged up.
I get the feeling from reading some of the comments on the blog that a lot of people are pretty angry about this. I'm not talking about people who are involved in the financial world, but ordinary Joes, homeowners who, as you say, have most of their wealth tied up in their houses. They don't dabble in the stock market, and they're not big investors, but they see as the fault for all of this lying with the speculators, people who've been irresponsible.
Well, look, no one blames the speculators when things are going up. They only get blamed when things are going down. All right, let's remember that. Okay, and people are always looking for someone else to blame except themselves. So I don't really blame the speculators. Did they add perhaps to some of the volatility? Absolutely. But I think to place the blame just on speculators would be wrong. I think you have to blame Wall Street for a lot of the problems we're having. I think you have to blame former Fed policies, Alan Greenspan for keeping money too cheap too long, for being too complacent about the financial instruments that were being evolved on Wall Street. I think you have to blame the pay structure that we have on Wall Street. Hey, I think it would be better basically that you don't get your bonuses for 10 years. Let's see how things really play out. Instead of, basically being able to pull it out, in stock options maybe 3 to 4 years down the line.
Todd, we're out of time, but you can continue the debate by logging on to cnn.com/international and taking a look at Todd's blog. You can access it right there from the front page. It's about halfway down on the right-hand side.